Mr. Michael Fisher himself. So I had to bribe your events coordinator to work me into your schedule. You're a busy guy these days, man.
Offense coordinator. It's actually just my alter
Yeah,
ego,
is that what it
so
was?
is it yeah,
Hey,
exactly.
so what I thought we'd talk about is so I think everybody knows who you are. You're like the VA loans, not VA as in virtual assistant, but VA loans. You're kind of the industry guru these days. That you've got a large following. You got Facebook groups. You got trainings that you do for loan officers for VA. And we had you on the Breakfast Club the other day, and you said this thing that I just loved, and you gave us a little cheat sheet. I thought we'd kind of do a deep dive into some of that stuff now. So you're on the right episode if you want to learn some things about VA loans that will likely help you close a few more deals or be able to give some good information. Certainly have the opportunity to close more deals. But you said this thing, don't FHA my VA. Just before we go into the I want to go line by line on this thing. But what does that mean? Don't FHA my VA.
Well, it's something that came out of the community of loan officers that, we work with and train, and, uh, we kept coming back to the same concept that VA itself can be a little bit vague in their guidelines, which I think is a good thing. It gives the companies a chance to help the vets, and that's kind of the motto there. Let's help the vets whenever we can. The problem is in today's world, people really like black and white. So if there isn't a whole lot of information in writing, they'll default to other loan products. They'll oftentimes default to FHA. You're like, oh, it's a government loan. We got to follow these rules. So we kind of, came up with it. One of the students we had came up with it, and we latched on it right away and said, wow, this is kind of what companies are doing. They're applying FHA rules in situations and scenarios where they really don't need to. And, if we understand that and we start talking to veterans and agents about it, we might be able to get vets into homes quicker, or we might be able to help them, close under a contract quicker. And ultimately, we can just help more, help the agents, help the vets. And it all starts with talking about it and learning about it. And, sometimes we got to go back and push our companies a little bit, but more often than not, there's some anecdotes in the marketplace that keep folks from getting offers accepted. So our goal is just to clear up some of that confusion and help our loan officers and our real estate partners just be better, right?
Yeah, and it's really just kind of understanding some very common misconceptions, I guess. Like a lot of people think that VA loans are like a pain in the butt, and actually they can be the easiest things ever. So let's just go on these. I'm going to kind of go line by line on this little cheat sheet you have, and I might have it in slightly different order than what you sent it out as. But like one of the things you had here was like VA loans, you have no lease needed or 25% equity to offset departing residents. What does that mean?
So what that means is, let's say I'm the veteran or the consumer. I mean, just to be
Okay.
clear, I'm not a veteran, I'm a civilian, but I'm gonna go ahead in this scenario, turn my house into a rental, and I'm gonna
Okay.
buy another property. We can do that all day with the
So
VA
I've got a
loans.
VA. So I got a VA loan. So I am a veteran, just FYI. So if I had a VA loan on my current house, I can rent it out and get another VA loan.
Correct. As long as you have enough entitlement remaining. And we can talk about that another time. But if you have enough entitlement, the loan officer did the math right, and they say, hey, Carl, you can turn your current house into a rental. I know you want to move a little further away from the city, and you got a good reason to do it. You're buying another primary residence. Occupancy makes sense. So, and you say, well, I don't really want to sell it. I think this is a good house to turn into a rental. So with other mortgage products, they might say some things like, "Hey, Carl, you got to have some management experience," or "Hey, we got to only use 25% or 75% of the market rent. We have to take 25% off the top." Or some products require you have equity in your home, like FHA would require, I've got to have like 25% equity before I can even think about doing something like that. Well, on VA, the equity position doesn't matter as much. And having a full rental agreement in place doesn't matter as much. It's very easy to offset. We just need a letter, a statement. In the loan world, we call it an explanation letter, right? From you that says, I intend to rent this house out as soon as I buy my new house and move. That's all we need to do for explaining it. Then we got to go back and corroborate the story that you're going to get enough rent to offset the payment. And we can quite simply do that with a rent a meter or a Zillow rent estimate. Or if we can't get good data online, we could get like a real estate broker's price opinion. Worst case, some companies might say, hey, we want an appraiser to give us an appraiser rent schedule. But that's quite a bit different from what we'd have to do on other loan products. So that's a perfect example. Don't FHA my VA. Makes it super easy for veterans to build wealth in real estate by converting a primary into an investment. A lot of loan officers are missing it. A lot of agents are missing it, and they're not giving that advice out there. So that's going to make you stand out if you learn that rule. I love it.
What about, you say you have here, your next thing, one of the things you have here is a no flip rule. What does that mean?
Well, this is good for the loan officer who has said, "Hey, I want to kind of work with more real estate investors, and I want to figure out, how to somehow work with these folks that are buying and retaining or fixing and flipping or all this kind of stuff. This is a good network for me." Just understanding that on other loan products, especially FHA, you got to own the house for a specific amount of time, 90 days for some of the loan products like FHA. So on VA, there is no flip rule. So you could buy a house and you could say, hey, I've got my contractors coming in this weekend and they're going to put $15,000 of work in and they can get this all done in a week and a half or 2 weeks or whatever. You could get it back on the market and accept a VA offer pretty much right away, as quick as you can get a new offer on that house. So there isn't really a flip rule there. So that's
How
that's
about,
misunderstood all the time. Yep.
what's this one here? No 100-mile radius. What's that?
Same concept. We were talking about you retaining a property for rental. That if you wanted to retain that property and turn it into a rental, um, on other loan products like FHA, you might have to go a certain distance, like over 100 miles, before you could use that VA loan or FHA loan again. It's not true on VA. On VA, it doesn't have to be 100. You don't have to be moving 100 miles away to use VA again to buy a
Just
new
have to make
primary.
sense.
Just got to
Just like,
make sense.
that
Yeah,
makes
like
sense. Yeah.
like I was moving out of the city because there's too much congestion and traffic. I want to move to the country, and I'm
Or
downsizing.
to
My
move,
kids move out of the house.
or I want to move to the city so I'm closer to
Yep.
work, or
Yeah.
like whatever. It just has to make sense.
That makes sense. Like you didn't just buy a house 2 months ago and turn it into a rental. That probably doesn't make sense
Right, right,
unless
right.
you got a legit new job, or you're in the military and you got orders to move to a different state or something like that. But yeah, I mean, if you've been there a while and you got a good logical reason, families increasing, families decreasing, again, job changes, all that kind of stuff. So
Hey, why do you think VA loans kind of got and maybe it's just my experience, maybe not yours, but it seems like sometimes VA loans kind of get a bad rap. Like they're too restricting. It sounds like it's absolutely opposite is the case. Like, why did they get kind of a bad rap sometimes? Like
man,
they're a
I
pain in the
always
butt to
say,
work with.
I always say who you work with matters. And, we're out here at our company and in my circles, we're trying to teach veterans and agents on the street. I just taught a class yesterday with one of the folks on our team, our loan team. We had
Uh-huh.
about 20 agents in the class. And I kept saying over and over again, who you work with matters. Working with folks that know the processes in the products makes a big difference. And one thing I kept coming back to in that class was like, a lot of agents will say, oh, we got all these appraisal problems. I say, well, for example, the VA gives us posted appraisal turn times. And if we know those turn times and we communicate those clearly with the other parties and they say, well, we got to do this as quickly as possible, well, we probably should you should know how to order appraisal real quick, right? Like, hey,
Yeah.
the posted appraisal turn time, just for example, in Michigan, where I'm at, is 8 business days. And so if I got someone saying, hey, Mike, can you close this VA loan in 2 weeks? We don't have an appraisal yet. Man, maybe, but I'm telling you guys right up front, the VA, could take 8 days on the appraisal. Let's get it ordered today. Let's get it under contract. I'm going to push my team to make sure we get that order in the system by at least tonight or tomorrow morning. And then I'm going to put some notes in there and I'm going to communicate with the loan center on the timing of it. So a lot of loan officers wouldn't know that. They wouldn't know that process. They wouldn't communicate that to their veteran consumers or their agents. And so, the agents would come back and say, oh, that was really bumpy. That wasn't smooth. It didn't seem to go very well. But really, what the root of the problem was lack of knowledge on the processes and the
Hmm.
product. Does that make sense?
Hmm.
So, yeah, so that can happen a lot. The other part that I see, and this is kind of important, is that the VA itself gives a fairly flexible loan product. The VA loan can be used down to lower credit scores. It can be used in some cases with higher debt ratios and things of that nature. Now, some loan officers exploit that and slap pre-approvals for veterans, slap letters out there for vets that are probably not super qualified. And instead of doing the research and running things through an underwriter up front and getting all the documents like we do on our team. I mean, I know you know how our team operates with
Hmm.
the honey badger. I mean, we don't mess around on that kind of stuff. So at the end of the day, if the loan officer and the company is doing a good job, quote unquote, vetting the consumer, the veteran up front, making sure that all the docs are in order, it's on the lender. It's not on the VA. So I feel like a lot of times when a lender makes a mistake, they'll blame the VA and they'll say, "Oh, well, the VA is tough to deal with, and this we're having problems because of the VA." And really, the problem was that the lender didn't look at the file, didn't kind of vet the application. They were trying to be real flexible, like the VA allows, but at the end of the day, they said, "Oh man, this doesn't quite meet our standards," and so the vet can get bounced around in the real estate market. And so I see that all the time. I see the folks on our team going in to do what we like to call rescue deals. Well, so and so said they were good to go because they have a minimum credit score of 580 and this one's got a 585. And I take a look at it and I go, man, I hear you guys, but this person's never paid a mortgage ever in their life. They just had a car repossession and they're really kind of struggling right now. And I can see maybe why, you know, somebody might have denied the loan, but yeah, they did meet the minimum credit requirement. But holy cow, I don't think that loan officer really went to their team and double checked before they went in the marketplace. And now everyone's blaming the VA instead of the
Hmm.
lender. And so that
Hmm.
can be a big problem.
So probably a lot of it
Yeah,
is just it's either companies put overlays on top of it, or underwriters put overlays on top of it, and frankly, just the lack of knowledge from the loan officer,
yep,
which
yep.
was one of the purpose of doing today's podcast is to bring some of these things to light, like you have on this next one here, um, which I thought was very interesting. Uh, don't need financial documents from donor on gift funds, and anyone can give a gift.
Mhm, mhm.
And so like I could have a buddy of mine, right? Or again, as long as it makes sense, right? I can have a buddy of mine gift me the funds, and oh by the way, we don't have to do a rectal exam on them on where they come up with the funds. Like we don't have to
Right.
show their we don't have to source their funds, and anybody that makes reasonable sense,
Mhm,
anybody
mhm.
can make a gift to me. I thought that was very interesting.
Yeah, and there's a couple things that go into it. Number one, there is Patriot Act, and we still got to be careful and some of the things that we normally do on a loan file. But at the end of the day, we don't have to get as detailed as we would on like an FHA loan with the, we always get pushback. I got to go get the donor's bank statement. We don't necessarily need that on VA, or the donor has to be a blood relative or something like that, or close personal relationship. It can be anybody on VA as long as it's not like the builder. There's a little bit
Well, of
too too
course,
too
right? The
much of
builder, the
a relationship
realtor,
there. Yeah,
right.
exactly,
Hmm.
exactly.
Yeah,
But yeah, that's so there are some flexibilities. Like I said, sometimes lenders will push those flexibilities too far, and then oh, they'll blame the VA instead of blaming themselves for not knowing their own internal processes. But
right. And let's cover a couple more here. Here's one I thought was interesting, which actually I just finished dealing with on a house that I just bought with the insurance company. Actually, I guess in my case, it was no minimum age of life of roof. So I know, like for my insurance policy, the roof had to have at least 5 years. I just bought another house up in High Point, North Carolina, where my daughter lives up there, and um, we couldn't get insurance because the roof. They said, yeah, I think it had a 5 year life expectancy, and they said, well, it needs to be more than 5 years or something like that. But anyway, so on a VA loan, there is. I mean, obviously the roof can't be. You can't have buckets inside the house where the roof is leaking, of course. But you don't. What I'm hearing you say here is I don't have to have a letter from the roof inspection that hey, this we think this roof's going to be another 10, 15 years here.
right, there isn't a specific age limit in like other loan products like FHA. They'll throw a number at you and say it's got to be X amount of years. Now, yes, you got to have home insurance, and so your insurance, whatever requirements they have, you certainly have to meet. And the VA says that's got to be safe, sound, and sanitary. So yeah, I mean, if there's current leaks and
Of
shingles
course.
are falling off and all that kind of stuff, yes, that's absolutely a problem.
Yeah.
But sometimes folks will come back to us and say, well, this roof doesn't have 5 years left. We're like, where does it say that in the handbook? It doesn't. So
Right.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free, cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next.
I think the bottom line on the VA loans is they're there to protect the veteran, and they're there to make it, while at the same time they're there to make it easy for the veteran to buy a home. So it's meant as a benefit, and it's kind of like a protective guard, but not so many regulations that it prohibits them from buying a house in the first place. Like you have this other one here, a non-borrowing spouse can offset debt. Tell me what that means.
yeah, that's one that I think is missed a lot, and it's unique to the VA loan. The VA loan has what we call a residual income analysis, which is a little bit different than an income outgo debt ratio analysis. The debt ratio analysis is more what we are used to in our mortgage world. Well, residual income, it's a measure of real things like what's the cost to heat your house, what's the square footage of your house, what do you actually pay in taxes to your state and in the government, like what comes out of your paycheck, what's left over at the end of the month. And the VA kind of does a calculation, said, well, if you have enough residual income, even if you're pushing the limits on income and outgo, we can still see that you got enough money to pay your bills. Well, sometimes we'll get a mortgage application with a married couple, and the veteran, one of the spouses, if you will, is on the loan and the other one is not. And so, it certainly have to be the veteran on the loan to do a VA loan, but let's say that the spouse isn't on the loan for whatever reason, divorce, credit, who knows. But they go through and they do the math in this residual income calculations coming up. It's off a little bit. We can take the spouse's income and we can say, hey, we have income from the house. We can change that calculation and lower it because we can see that there is some additional money coming in. Where, like on other loan products, we wouldn't necessarily be able to use that unless they're on the loan. Does that make sense? So
Yeah.
there's a few cases where we can use the spouse's income even if they're not on the loan. Another good example would be our what we call a VA manual underwrite. We can use that as what we call a compensating factor. Like they don't quite fit in the box, they're really darn close. Tell me what else would make this loan good. Well, this might make this loan good because they're a married couple and they have more income. We can't use her for credit reasons right now, but there is more household access to funds and assets, if you will. So
Yeah.
there are things like that that are much different than FHA and a VA, and it is more flexible. And some companies and some loan officers get it, and some maybe exploit it too much, and it can cause problems with real estate transactions because they don't kind of vet or pre-underwrite the file up front when it gets close like that. So
Hey, do you have any idea what percentage, and this is off the wall question. Do you have any idea what percentage of mortgages like pulled out last year were VA? Like, is there a percentage number for that, more or
it really
less?
varies based on the state. Nationwide, we're getting close to 10%, a little higher than where you were a few years ago. And the minute I put this on recording, somebody's going to pull up the different time frames and quarters, and
No, I get
probably.
it, but give or
But
take
yeah,
10%, somewhere in
give or
that
take.
range.
And then some states it's more, 15 to 18%. Some states have a lot more veterans. Some states are a little bit lower. The stat that I have a hard time tracking down, but I hear it a lot when we're talking about VA loans. It's kind of more of a NAR stat, and it's more of a stat of how many veterans are actually buying houses. And usually the number that I find from NAR is closer to double that. So like only half of the vets buying houses are actually using VA loans. So when I'm out there teaching agents, I'm like, hey, I'm going to teach you about the VA loan, but in general, even though you might think it's a niche, veterans buy more houses, and there's a lot of them out there, the biggest employer in the United States. So even if the veteran elects not to use the VA loan product, we want to know as much as we can about the veteran lifestyle, about the veteran demographic, about multiple moves, and things like occupancy, job relocation. And that's where I see a lot of companies and loan officers struggling, is they don't learn what it takes to work with a borrower who's got a job offer in another state and has got a spouse who's trailing, whose job hasn't quite transitioned yet, and they're trying to figure out when they're going to move and what the timing is. And those situations may not be a VA loan, maybe it's a conventional loan. But either way, you have to know about that lifestyle and the moves in a lot of the moving parts, no matter what loan product that you use.
Yeah, I just think I think it's a I think it's a very underutilized tool that we have. 'Cause I know, like you, Mike, and frankly, like most of the other people on here that's listening to this today, we can get any kind of loan we want. And I have to be honest with you, it's been a while since I pulled out a mortgage. The good Lord's been good to us, and I don't know. I personally, it sounds weird as heck, man. I'm a big proponent of the debt-free lifestyle, but here I am in the lending business. Like I don't know. Is it
I'll help you make up for it. I'll take on some extra debts just to
yeah,
offset
anyway,
you.
that's a whole nother thing. But anyway,
Oh, man.
my last two loans that I got were VA loans. So I've used my VA loan. I think it's three times. One, two. I think three times over the course of my home buying life.
Mhm.
I used mine, and gosh, they just sailed right through. So I know, at our company, I think I said that in the beginning that you're, not only you're the VA guru, you and I work at the same company, and it's awesome having you as a resource. That anytime I'm wanting to, do something on a VA or one of the loan officers in my branch or wanting to do something with VA, it's nice that they can, instead of having to Google an answer, frankly, you are Google when it comes to the VA loans. So it's a great resource. Do you have any kind of a podcast or a Facebook page or anything like that for somebody
I've got one that folks can search and find pretty easily, veteran housing professionals, and it's free. And you're going to ask some questions. You got to identify yourself as an industry pro, either a realtor or a loan officer, and you'll see us posting and commenting all the time. Occasionally, there's going to be an invite to one of the calls that we do, either for our loan officers or real estate agents. We'd love to see more folks coming in there, but we'll see all the time. We'll see, like scenarios, like, hey, I've got a vet that's looking to do this and move here. What do I need to be aware of? And,
Yeah.
The folks that have gone through some of our high level trainings are tasked with, providing right answers in that kind of community. So
Yeah.
yeah, it's pretty cool. That's cool. I got a couple other, like, don't FHA my VA tips if we got
Okay.
about 2 or 3 minutes, like just some things that I think will really help the folks on the street. And, one of them that I see all the time is I see, loan officers and real estate agents and even veterans being afraid to use their VA benefit on a condo. They kind of think, oh man, it's going to be so tough and there's so much red tape. And I mean, I've kind of found myself that it's not that much different than like a conventional loan. You need pretty much the same documents. You got to submit them to somebody to review. And at our company, the condos are reviewed internally, like a lot of companies. But you actually have to go to the VA for this one. But the VA turn time, anywhere from 5 to 7, sometimes 8 business days. It's not that bad if you get your documents quickly. And one of the cool things about it, or two cool things in my opinion, number one, the condo approval, it doesn't expire. So like FHA, again, it's a don't FHA my VA type thing. FHA, you got to renew those approvals over and over. VA, you just approve the complex one time and it's good. So that in itself is pretty cool. Like you do, or you help a veteran get a condo approved, you could send a mailer out to everybody that lives there. Hey, by the way, if you're a vet, we could help you refinance now because now your condo is VA eligible. Or you could potentially open up your condo, if you're going to list it, to about 20% more buyers because of the folks that could potentially use their VA home loans. So, it's a good opportunity. And then number two, if the VA rejects it and say like, hey, I don't like the fact that, this condo is in Florida and it has this line item that says you can't rent your condo out to anyone else. That's pretty common in Florida, where they try to kind of keep the vacation rentals at bay, which I totally understand. Well, the VA doesn't like that one little clause. Well, let's say that you got that clause and they reject the whole condo. You can do a 1 unit waiver. Like, nobody knows this. You can go back to the VA and have the veteran write a letter saying like, hey, I realize you guys rejected this condo and I can see the reason why, and my loan officer helped me find it. I'm okay with it. I'm not going to hold the VA liable. I'd still like to get a waiver to buy this condo, and the VA will absolutely do it. They approve like 70 to 80% of the waivers. So I see a lot of folks completely missing out on that and not knowing about it. And again, if you're stuck on it, you can find me and message me one-on-one. I've helped lots of loan officers learn how to do 1-unit waivers. The last thing I got for you that's kind of a big deal, I think, in the, don't FHA my VA, is this concept of loan limits. If a veteran has never used their VA home loan, or if they sold properties and do what they call restore entitlement, I think you've done that in the past
Yep.
yourself
Mhm.
personally, Carl.
Yep.
In today's world, there's no loan limit. So I see a lot of high-end listings where they don't even have VA included on the listing ticket. They just don't think about it. Well, I mean, vets are making lots of money and they don't have college debt, and so at the end of the day, you got a high-end listing, you might want to open it up to VA because there's a good chance that could buy a higher end property with less down. No, I know a lot of folks want to be debt free like you, but there's also folks that are, kind of younger in their evolution, their careers, and they say, well, hey, I want to put less down because I want to build my retirement. I want to open up some other businesses and I want to kind of get that money working for me before I pay my mortgage down. And, I like to use the term advisor. One of my training programs is called Veteran Mortgage Advisor. Like, we're trying to help these folks get good advice. Yeah, I get it. You could buy this $1 million property and put 200 down, but you were talking to me about financial planning. You were referred to me by a financial planner. You talked to me about opening another business. How about, Mr. Veteran, maybe we try to do this VA and you hang on to that $200,000. Go back to your financial planner first before you do that, because I could do this loan at 0 down. So, like, a lot of loan officers, I think, are kind of missing that
Mhm.
loan limit side. And they think, oh, it's like FHA or conventional, and there's a loan limit. So I think, to me, that's a really cool thing to hang on to.
Yeah. Yeah. And the thing about, again, I have to remind myself, I don't mean to give anybody the misimpression. You're right. I'm a little further down the timeline, and investment strategies different at different points in your life, for sure changes. And actually, paying off our mortgages was the very last thing that we did all the other things first, and then we did the mortgages. But that's a whole nother topic for another whole nother podcast. So, well, Mike, I appreciate you being here, brother. You're always a great source of information. Thanks for helping clarify this. Appreciate you coming on the Breakfast Club from time to time. Real good stuff there, and we'll see you on the web, brother.
And the last thing I gotta say, Carl, is number one is to thank you, because you reached out to me, you saw me doing this, and you said, Mike, I like this. I'd like to help you. And, like, you basically kind of helped me for free. I didn't really ask. You solicited me and said, like Mike, just I'll help you. And you gave me some really good stuff. One of the things you told me, and I've heard you say it over and over on podcasts, is those who don't ask don't get. And I just want to remind the real estate agents and loan officers that might be listening to this, the same thing goes for VA transactions. If you don't ask your consumers if they're VA eligible, if you don't ask real estate agents if they love veterans, if you don't tell people that you love working with veterans and that you're really good at it, then you may not find as many veterans coming back to you over and over again. So, I know the folks in my community have been hounded and trained really hard that they got to ask. And a lot of that and you inspired me to do that a lot more. And I just think it's really important. So make sure if you're a loan officer out there on the street, make sure you're asking folks if they are their spouse or a veteran. Same thing for a realtor. That starts the conversation. So
Good stuff,
love it.
man. Thanks for what you bring in the industry, my man.
Yeah, appreciate you, man. Same
All
way.
right.
You got a big show, big megaphone, and I'm just proud to be a small part of it. Thank you, man.
All right. I appreciate it. All right. Hey, for our listeners, thanks for being here. Hey, any loan officer you think might benefit from this, hey, forward it over to them. And we always appreciate those reviews. One thing we ask for is just give us an honest review. That's all we're looking for. And so if you go to 5starcarl.com, 5starcarl.com, there's a review there, or you can just review it whatever platform that you're listening on. It helps get the word out. So we don't ask for much, but just some honest feedback. And by the way, in the reviews, if you have some topics you want us to cover, I'd love to hear your feedback on different topics. That's where we get the ideas from, is from suggestions from the fine people just like you. So thanks again. It was an honor hanging out with you while you're on your treadmill or walking the dog or driving the car or whatever you find yourself doing. And we'll see you on the next episode of Loan Officer Freedom. Thanks again. Bye-bye.